So I just want to look a bit about the taxation of the leasing entities. You have the notes already shared through our platform. I just want to go through it, and then I look on a question which was tested under the leasing entities in our past papers. And then I will just be able to incorporate 2 or 3 questions to assist us prepare for our exams. But when you look on these leasing entities, we are saying that a lease is just an agreement between the lessor and the lessee to use an asset of a given duration upon payment of fixed periodic installments, which we normally call it lease rentals. The types of leases, number 1, we have operating lease. And we are saying it is a lease contract where the asset is transferred to the lessee, but risk and rewards remains with the lessor. Just leases to mean that the lessee, it means we are discussing about someone who is a tenant who want to acquire the rights of a certain asset. Then we have the lessor who is the owner of the assets. So in that regard, it is very important to understand that who is a lessee, who is a lessor. So we have said that one of the key type is the operating lease. Number 2, we normally have finance lease, where we are saying the asset is transferred to the lessee together with the rights associated with it. The risk, sorry, it should be the asset is normally transferred to the lessee together with the risk associated with it. Number 3, we normally have the cross-border lease, and it's a lease contract between one party who is in Kenya and another party which is outside Kenya. In that regard, we are discussing about operating an aspect of looking for an asset which is not within our borders. Then number 4, we are discussing about the hire purchase lease. We are saying it is a lease agreement which has an option to transfer the ownership of the assets on its expiry upon payment of hire purchase installments. One of the key points to note, we should be discussing about the lease rentals are allowable expenses in the books of the lessee. The lease rentals are taxable income in the books of the lessor, that is the landlord. The lessor enjoys the capital allowances on the leased assets, that is the assets are capitalized in his books. Then the last thing that we have to be checking on here should be the risk and rewards are always on the lessor, except for the finance lease. So in that case, allow me just to focus on looking for on an illustration. An illustration which was tested through this aspect of listing of assets. So there is a question somewhere. April 2022, question 5C. April 2022. So let me just check on it. April 2022. It should be question number 5C. Question 5C. Okay. The question of Araka Limited. Someone read for us. Someone read for us. Beatrice, you can read.
Haraka Limited started operations on 1st January 2021 in the business of leasing vehicles and computers. The following information relates to the company's transactions for the year ended 31st December 2021. The company leased the following assets in the course of the year: 6 delivery vans to Zito Limited for 6 months at 30,000 shillings each per month; 4 pickup vehicles to Chama Limited in Uganda for 400,000 shillings per month for 6 months; 20 computers to Upper University at a monthly lease of 4,000 each for the whole year; a BMW vehicle to be limited for use by one of its directors at a monthly lease charge of 60,000; 2 Land Cruiser Prado vehicles to Z Contractors at an annual lease charge of 1,440,000 shillings in total. The lease contract for one vehicle was cancelled on 30th June 2021 after Z Contractors failed to pay lease charges for 4 months in the year. The delivery vans to Zito Limited were returned upon lease expiry, and Haraka Limited leased them to Sokoni Supermarket for 4 months at 24,000 shillings each per month. 2. Haraka Limited incurred the following expenses in the course of the year: general administration expenses 1,600,000, legal expenses 480,000, repairs and servicing 320,000. Legal expenses included 120,000 shillings for defense against claims of breach of the lease contract. 3. Investment allowances have been agreed with the Revenue Authority to be 620,000 shillings for the year. 4. Haraka Limited had other incomes as follows: rental income from residential property 2,400,000 shillings per annum; dividend from Sifa Mutual Fund at 6,000 shillings gross; interest from money market fund 120,000 shillings gross; royalties of 360,000 shillings net of advertising expenses of 60,000; renewal of patents 40,000 shillings and research cost of 80,000 shillings. Required: compute the taxable income or loss for Haraka Limited for the year ended 31st December 2021. The tax payable, if any, by Haraka Limited for the year ended 31st December 2021.
Thank you so much. That is a question, and you can see the question discusses about the leasing of some assets which are basically used under certain operations within the organization. So when you are just looking on it, you will be able to find that it is a bit of a question which you can just be able to use the general knowledge and get everything. In that case, allow me just to, because already we are being told to calculate, when you look at it here, we are not discussing about adjustments, but we just want to get the taxable income or losses for Haraka Limited for the certain period on 2021. So let us just group the taxable incomes regarding to the leasing. Then we have the allowable expense deducted, incorporating other incomes of the business. Then we are going to be determining the tax income and the tax payable in that order. So let me just share my board. So when you come across this question in an exam, how are you supposed to be doing it? So we are discussing about a question tested in April 2022, question number 5C. So in this case, I have said that we start with our title. We start with is normally called Araka Limited. And you know the titles you write in caps, Araka Limited. We are discussing about 2021 taxable income computation. Taxable income computation. So in that case, we start with the, let us just have two columns of Kenya shillings. We have Kenya shillings there. Then we start by looking on the incomes. We start with the incomes. So let me just go from where the question starts. Where the question starts, let me just focus. Okay. Will be good with time. Now, when the question starts, we are being told the company lists the following assets in the course of the year. Number one, we have the list of the delivery vans. The list of delivery vans. How much of the cost? We are being told the 6 delivery vans for Zito Limited for 6 months are 30,000 each per month. So to get the total, I just need to take 30,000 is per van. They are around 6. That is the cost per month. Then we are listing for 6 months, right? So it means you are just taking 36. You're just taking 36 times 30,000, getting around 80,000. Get it 80,000. Then number 2, we are being told we have 4 pickup vehicle for to Chama Limited in Uganda for 400,000 per month for 6 months. So in this case, we are looking about list of 4 pickups. List of 4 pickups. What are we being told? We are being told there are 4 pickup vehicles, right? Each costing 400,000 times 4 for how many months? 4 pickup vehicles, Chama Limited in Uganda for 6 months. So how much it is? 400,000 times 4 times 6. We are getting around 9.6 million. 9.6 million. Let me repeat, 4 pickup vehicle to Chama Limited in Uganda for 400,000 for 6. This is wrong. It means each vehicle, each pickup is for 100,000 because all of them they are costing 400,000 per month when they are 4. But we are listing for 6 months. This should be translating to 2.4 million. It should be 2.4 million. Okay. Next, we are being told there. Next, we are being told. I've been told what? Minute, please. We are being told 20 computers to Upper University at a monthly lease of 400,000. So number 3, we are being told 20 computers to Upper University at a monthly lease of 4,000 each. So in this case, we are talking about computers. Computers, they are 20 each. 20 computers, each being leased at 4,000 shillings. We multiply by 20 computers to Upper for a monthly of that, for the whole year. That translates to 12 times 12 months. Times 12 months, how much is this? So in simple way, we say 20 times 4,000 times 12, getting 960,000. Next, after the computers, we are being told a BMW vehicle to be limited for use by one of its directors at a monthly lease charge of 60,000. So in that case, it means the list of the BMW vehicle, it will be, we are being told it is being listed at how much? 60,000 times 12, getting 960,000. Getting 960,000. Next, we
It's
have
720.
two Land Cruiser Prado. Two Land
Excuse
Cruiser
me.
Prado vehicles. Hello?
Excuse?
Yes?
60 times 12 is 720.
720, thank you. Okay. Two Land Cruiser Prado vehicle to Z Limited contractors at an annual lease charge of 1440 in total. The lease contract for one vehicle was cancelled. On 30th June 2021 after Z Limited contractors failed to pay the lease charge for 4 months in the year. So in this case, it means that the Land Cruiser, let's do a simple math. Land Cruiser, for the year, they were 1440,000, right? One of the lease was cancelled after 6 months. So in this case, it means we take 720 plus 720 times 6/12. Times 6/12. So how much it is? So it will be 720 times 6 divided by 12, getting 360 plus 720, getting 1080,000. So we are being told there, after that, we are being told the delivery vans to Zito Limited were returned upon lease expiry, and Araka Limited leased them to Sokoni Supermarket for 4 months. Sorry?
Could you please explain about the Land Cruiser? I think your internet was breaking at that point.
So in this regard, I've said the total for the two Land Cruisers is 1440. So in simple way, it means for the one Land Cruiser is 720,000, right? It's 720,000. So in this case, it means 720 it is for one Land Cruiser, which was paid for the whole year. For the second Land Cruiser, we are being told that the lease contract for one vehicle was cancelled on 30th June 2021 after Z Limited failed to pay these charges for 4 months in the year. So it means that we are just going to be factoring the amount, the total amount which translates to 6 months. Then the others, we are not going to be focusing. The other 6 months was terminated. So they will be forced to pay for only half a year. Now, the delivery vans to Zito Limited were returned upon lease expiry, and Araka Limited leased them to the Sokoni Supermarket for 4 months at 24,000 each per month. So in this case, it means the list of delivery vans would be how each is costing us 24,000 times how much? We have been told that the delivery vans, you remember they were 6, right? We multiply it with they were leased to Sokoni for 4 months, right? Times 4. There were 6 delivery vans. You remember that? So we multiply by 4, it will be 24,000 times 6 times 4, getting around 576,000. 576,000. Trying to get around 576,000. Now, when I look on addition number 2, those are expenses. So in this case, let me get the gross lease receivable. the gross lease receivable, we have 1080 plus 2400 plus 960 plus 720 plus 1080 plus 576. We are getting around 16,000. Now from there, let me look on the allowable expenses. Less allowable expenses. Let us look on the expense which are allowable. I will start with the note number 2, additional information, where we are being told Araka Limited incurred the following expenses in the course of the year. We have the general admin expenses, they are allowable. General admin expenses is an allowable expense amounting to 1.6 million. Right. Next, we are being told the legal expenses. Our legal expenses, I can see we are being given 480,000. But I can see there is a note down there before the additional number 3, where we are being told the legal expense included 120,000 for defense against claims for the breach of the lease contract. We subtract it here. We subtract 120. How much will be allowable? Minus 120, getting 360,000. After that, we can go to repairs and servicing. Repairs and servicing, we are being told they are totaling to 320,000. Repairs and servicing, we have 320. Then, in note number 3, we have the investment allowances have been agreed with the commissioner to be 620 for the year. So here we discuss about investment allowances amounting to 620,000. 620. Then we have been told in note number 4, I can see those are other incomes. So we don't have any other expenses. So let me just reach at that point. Let me get my total allowable expense. We are getting 2.9 million. 2.9 million. So let me just get the total business income. So it means I just take 6816 minus my answer, getting 39,16,000. Correct. Let us add other incomes. Let us look on the other incomes. We are being told in note number 4 that rental income from the residential property was amounted to 2.4 million per year. So in this case, I can say the rental income here, I can talk about the withholding tax at the rate of 10% is final. Then I put that there. The rental income, the withholding tax at the rate of 10% is final. I can see we have the dividends from CIFA mutual funds of 36,000 gross, right? The dividends from CIFA. I say the withholding tax. Today we are discussing about 10% under the new review. The withholding tax at the rate of 10% is final. We put that there. Next, we are discussing about the interest from money market funds. The interest from money market funds. The interest from money market funds. For money market fund, we are talking about 120. The withholding tax at the rate of 10% or 15% is not final. So the other income, the gross amount is normally added to other incomes. We tax it accordingly, of which is going to be providing us with a certain relief. Then we have the last one where we have been told the royalties of 360,000 net of advertising expenses of 60, renewal of patents of 40, and research cost of 80. So in this case, we just need to be getting the total. When I look on the cost of these royalties, let me just put it down here. So when I look on my royalties, we have been told they were around 360,000. Let us look on the disallowable expense we added back. They can see we have a disallowable expense of 40,000. This translates to 400,000. 400,000. Royalties of 400,000. We are adding 40 because the renewal patents rights is a disallowable expense, and therefore should be added back. Now from there, can you be able to get the total taxable income? Yes, we can be able to get it. The total taxable income. The total taxable income of ours is how much? That's 916 plus 120 plus 400, getting 4436,000. Now, let us calculate the tax payable. The tax payable. Now, in this case, we say, let us take 30% of taxable income, 4436,000. How much is this? Times 0.3, getting 1330, 800. Let us deduct the withholding tax relief. The withholding tax relief, we start with what? Allow me to start with the interest. Interest from CIFA. So we take how much? 15%. Is it from money market? Sorry. We take 15% of 120,000. So 15% of 120,000, we are getting 18,000. Then we have royalties. How much is the royalty? The rate is 5%. We multiply by 400,000. This translates to how much? 20,000 shillings. How much is the tax payable? How much is the tax payable there? The tax payable is how much? How much is our tax payable? So I say 1330, 800 minus 38,000, getting 1292, 1292, 800, 1292, 800. That is how the questions of leases are basically done. That is how we have to be doing them. That is how the questions for leases are normally done. Any question up to that point? If we don't have any question, allow me to check on another area. I think that is already sorted. There is a question asked by one of you regarding to taxation of contracts. And the taxation of contracts, we have to be understanding that the construction contracts takes a duration of more than 1 year, right? Hence, the incomes and the expenses must be associated with several years. So the taxable income is therefore the difference between the value of work which is being certified. We compare it with the value of the work certified and the cost of work certified during the year. So in case of the extra work, that is what we normally discuss, any additional work stipulated in the main contract. But we see it is necessary for the proper implementation of the contract. Such extra work can be regarded as a new contract if the amount involved is material. Otherwise, it will be part of the expenses for the original contracts. Now, in that case, I just want to do one question. which will be assisting you to look on the taxation of the contract, which basically is similar to the taxation of does not have much of differences with the taxation of the extraction companies and the petroleum, because I will just be able to do another question for the petroleums. But let me do for the taxation of contracts. Then I don't know whether it is part of the videos which I shared, but let me just repeat the question, and then I give you an assignment you do for your revisions from that end. So let us go there. Let me check. You have a question in November 2019. I'll look on November 2019, question 4C. So the changes of the interest rates and the change of the dividends rates, you're going just to be confirming with what the examiner will be providing for you in an exam, so that you're not using the wrong figures. Somewhat reads, Kevin. Kevin, you can read.
Contractors Limited. Okay, can you hear me?
Yes, yes.
Benita Contractors Limited operates in the construction industry. On 1st November 2016, the company won a tender for the construction of two projects, a hospital and an office complex. Construction of the project commenced on 1st January 2017. The following details relate to the two projects with the year ended at 1st December 2010. First, the project office complex. Balance of January 2010. So from there to read the figures.
Sorry?
Just to read all the details, or we go to the additional information. Additional information on consultancy fee for the hospital project included 4,000 prepaid for the year 2019. When the key allowance on funds was provided at the rate of 12.5% per annum, direct expenses accrued and not reflected above was follows. Hospital and office. As at 1st January 2018, hospital 200, office nil. As at 31st December 2018, hospital 1,000, office 400, required. As well showing the taxable profits and tax transfer, if any, by Benita Contractors Limited as at 31st December 2010.
1 minute, please. 1 minute. Okay, thank you. Let us continue. So we are being given a question here, and we are being given a question where we have to be sorting the a schedule. We have to be coming up with a schedule which is going to be showing the taxable profits for the hospital and the office. So in that case, when you get that kind of a question in an exam, don't do each of the requirements alone, but you can be able to do all of these concurrently. Now, remember, the titles, normally the titles are the same. And you are looking on the titles to write a title. So in this case, the Benita, these are the contractors, and we have said that they normally operate a construction company, so they are being given to run an obstacle project together with the office complex. So how am I going to be getting my solution of the question here? I say, if you need to get a solution in this case, let us look on the cumulative values at the end of the year, right? Because you can be able, or you can see we have been provided with that information. The cumulative, so the reason as to why we are looking on the cumulatives for both projects is because I just want to get the value of the work certified during the year. So what are my cumulatives at the end of the year? So the value of the work uncertified during the year provided there, but we are being providing these figures are where, let me check. I'm looking for very good. I can see we have the cumulative value of the work certified at the end of the year, which is 700,860. Then we need to be looking on the cumulative value at the beginning of the year, right? The cumulative values at the beginning of the year, we are being given 200,000 somewhere there, where they are calling it the value of the work certified to date, 200,000, and also we are being given 160. Let me just share my board so that I can show you how the question is normally done. We are looking on a question of taxation of contracts. Taxation of contracts, right? And in this case, when you're looking on the taxation of contracts, I've said we are doing a question in November 2019, question 4C. Question number 4C. The title is already also crucial. So we are looking on the Benita Contractors Limited. I think it should be looking like that. It should be Benita, okay. Benita Contractors Limited. We are doing the question for 2018. So we say 2018 taxable income computation. Taxable income computation like that. So we are doing for the hospitals. We are doing for hospital. And also we are doing for the office complex. Now in this case, just have two columns here. Kenya shillings there. And also on this side, you do the same. It looks like that. So I have said, you normally start with what? We have said, to do more your question, start with the cumulative value. Cumulative value at the end. The cumulative value at the end of the year was how much? And I was able to show you the cumulative values. For hospital, we are being given 700,000. Then for the office complex, we are being given around 860,000. Subtract less the cumulative value at start at the beginning of the year, which we are being told in our question, it is normally called the value of the work certified to date. Yes, 200,000 here. Then here we are being given 160,000. Very good. So how much is the value? The value of work certified. How much is the value of the work certified? What is the difference? Here we talk about 600,000. Here we talk about 700,000. 700,000 there. Now,
The first one is 500.
the first one is 500. Thank you. Now, this one you can be able to label it as your A. Right? Just label it as your A. Then let us get our the total cost, right? Let us get our total costs. How much will be the total cost? And I just want to start with the raw materials because I can see they are the first thing on the opening balances. Let me start with the raw materials. Anything regarding the raw materials, we have to be doing it fast. So the raw materials we are being given there at the beginning, the balance brought down, the raw materials brought down. The balance brought down at the beginning of the year should be how much? 6,000 here. Where can I put it? 6,000. And then on the other side, we have 4,000. Correct. From there we have, let us look on anything regarding to materials. I can go to the transaction undertaken during the year, and there are some of the materials which were delivered to the sites, right? Materials, we say to sites. We are being told the material which were delivered to sites from store, material delivered to sites. Let us start from store. The material from store, we are being given 10,000 for the hospital. So we have 10,000. It means we have additional materials there. Then we have here 14,000. Then we have other materials which we are being told from supplier. We are just increasing from the supplier. We're just increasing our number of the materials. From the supplier was able to give us 100,000 here for the hospital, and then for the office complex is 128,000. Good. Next we have the plant purchased. We just need to be looking on other materials. When you look on the transaction during the year down there, you'll be able to see we have some materials transferred out. Materials transferred. How many materials were transferred? We are being told part of the material which were transferred out, it is 10,000. And this one we have to be deducted because it reduces your material. 10,000 there. On the other side, we have the material transferred, we have 10,000 there. We also have on the other side 17,000. I think we have to get out to that point. Next, we also have, we are talking about the material sales. Material sales. When we are selling material, it means we are reducing the number of material that we have. And then this figure should be deducted. Here we are talking about 22,000 there. 22,000 there. Then from there, let us look on, do we have some materials on site? At the end of the year, we are being told that we have some materials. Materials on site. How much do we have? The materials on site at the end of the year, this should be carried down. We are being given 40,000 here. Correct. Then on the other side, we have 50,000. So how many materials do we use during the year? How much do we use in terms of materials? So in this case, I just say 116,000 minus 50,000. We are getting 66,000 here. Then on the other side, we have 4,000 plus 14,000 plus 128,000 minus 17,000 minus 22,000 minus 50,000, getting 57,000. Okay, when you finish up with the materials, you can look on let's look on the openings. The second one is accrued salaries and wages. So how am I going to be doing salaries and wages? At the beginning, because we are dealing with the accruals, let me just first look on the salaries and wages which you are able to pay during the year. I can see we have 120, and when we have the accruals, we are talking about 120. When we have the accruals, we normally less the balances at the beginning. So here we less 1500. 1500 is how much now? 1.5, correct? Minus 1.5 plus the balances at the ends. How much was the wages? When you look down there, we have the accrued wages at the end of the year, plus 1. How much is this? So 120 minus 1.5 plus 1, we are getting 119,500. You're getting around 119,500. Then on the other side, we do the same. When you look at the transactions in terms of the salary that you were able to pay during the year 180, then you subtract, because it's an accrued, we subtract the balances at the beginning, minus 1.2 plus the balances at the end, which we are being given as 2,000. Here we are getting 180,800. 180,800. That is the concept which we have to be doing. Let me just delete this for my space. You'll be able to see how we do when you are repeating the video. Now, after the materials, after the sales, salaries and wages, allow me just to look on the plan, because I can see there is a plan written down of values which are being provided. We can just grant them the WTA plans. Those plans, you can give them WTA at the rate of 10%. 10% of how much? Are you looking at whether you purchased any material during the year? Any plan? There is a plan which was purchased, but on the side of the office complex. That information is provided on the transaction undertaken during the year. So in this case, it means when I'm doing for the hospital, I just need to take the written down values, which is 190 plus 0, because there is no any material there is no any plan we purchased for the hospital. So this translates to 19,000 there. But on the other side, we were able to purchase some plans. So it means you just need to take 10%. We multiply it by the addition. At the beginning, we had a written down value of 150, but we purchased a material. A plant of how much? There is a plant of 120.
Excuse me.
Yes.
What about the additional information where we are told that the WTA on plant was provided at the rate of 12.5% per annum?
But that rate was during those periods. Remember, I'm just doing the question. You are not going to be doing 12.5%. The rate that we are going to be using, because the WTA for the plant will be the 10% under the new review which were taken, which took place during the period of 2020. So you cannot be able to use 12.5% right now. I'm just doing with the updated rates. I'm doing the updated rates. So in this case, it is 270 times 0.1, getting 27,000. Because when I do with the 12.5, when you are repeating your videos, you just be able to see there is a miss somewhere, and then it gives you are going to be confused at the end of the day. Now, after that, let me just now get away with the balances at the beginning. Allow me just not to tie the cost of work done. We shall be able to get back there. Let me just go to the transaction which took place during the year. I think I'm done with the materials. Plan purchased, I'm done with it. There is a subcontractor's fee. There is a subcontractor's fee. Here we don't have, but on the other side, we have around 18,000. Then from the subcontractors, we go to the subcontractors. We have consultancy fee. We have a consultancy fee. How much is our consultancy fee? Here we have 30, right? We have 30, but there is an information provided somewhere in the additional information where we are being told the consultancy fee for the hospital project include 40,000. When we have a prepaid, we have to be deducting it. So in this case, it means I take 30,000 minus 40. This translates to 29,960. Here we don't have, right? Sorry, here we have around, the consultant fee on the other end is how much? Sorry for that. We are being given 29,000. So the consultancy on the other side should be 29,000 here. Next, after the consultancy fee, we have inspection fee. How much is our inspection fee? And we say our inspection fee should be around the inspection fee here we have 10,000. Then here we have 5,000. From there, we have salaries and wages catered for, head office expenses. The head office expenses amount to how much? The head office expenses we are being given on the side of the office complex, 2,000. Then from the higher part, from the head office, we have the material transferred out, all that done. We have the planned lease charges. Planned lease charges. How much is our planned lease charges? The planned lease charges here we have 400. The other side is 5. 400 and 500. 400 and 500. Then we have we'll be given about, we talk about the direct expenses. Direct expenses. So how much is our direct expenses considering the additional information number 3? We have been told the direct expense that we have is 3,000, right? But we have the opening and closings. The direct expense accrued and not reflected. We have been given the accruals. So the one that we were able to pay during the year, we paid 3,000. Let's continue. I was discussing about the accruals on the expenses. So we take the one that we were able to pay during the year. We are talking about 300. At the beginning, we have 200 plus 1,000. 3,000 minus 200 plus 1,000. We are getting around 3,800. And on the other side, we do the same. So the direct expense, we have 2,000. 2,000 minus plus 400, because we don't have the beginning balance for the office complex, getting around 2,400. Getting 2,400. We don't have any other costs. So in this case, allow me to get the total cost of mine. So how much is my total cost? So we have 66,000 plus 119,500 plus 19,000 plus 29,960 plus 10,000 plus 4,200. Here we are getting 248,660. On the other side, we have 57,000 plus 180,800 plus 27,000 plus 18,000 plus 29,000 plus 5,000 plus 2,500 plus 2,400. Here we are getting 321. You can be able to confirm 321,700. 321,700. Now, there is a small working because to determine the taxable income, we said, let us look on the value of the work certified. We subtract the cost of work certified. Then it means we don't have the cost of work certified. How am I going to be doing about it? The cost of work certified is very simple. So to calculate the cost of the work certified, we say, because we just need to get the total value, to get our total value, we take the total value, the total cost of work certified plus the total value of work uncertified. The total value of the work certified plus the total value of the work uncertified. So let me get the value of the work certified. In this regard, it means, let me look for the hospital. Let me start with the hospital now. So again, for the hospital, I can see we have some values provided, right? We have, because the value of work certified, we have it here. The value, the total value of the work certified, we have 500,000. We add the total value of work uncertified is already provided somewhere. The value of the work uncertified in the year under the transactions, which is 30,000. This translates to 530,000, right? Now, to get the cost of work certified, a minute, please, I pick a call here. So how can we be able to get the cost of work certified? It means I will be able to take the cost of work certified, which is 500,000. You divide by the total here, which is 530. Then you multiply by your total cost, which is 248,660. I've said take the total value of the work certified, you divide by the total value, then you multiply by the total cost of yours. How much is that? So in this case, it means I just take 500 divided by 530, then I multiply it with 248,660, getting around 234, 234,585. The other one is for the office complex. And for the office complex, we do the same. We look on the value of the work, the total value of the work certified, we get 700,000 plus 700,000 plus here you can see we have been given the value of work uncertified during the years 42,000, getting 742,000. So to get the cost of work certified, I just do what? I just take 700,000, divide by 742,000, we multiply by 321,700. 341,700. Getting 303. 303,491. 303,491. Now, it means that what we have gotten is our B, right? This is our B now. Remember this one, we were able to denote A. These are our B's. This is your B. Together with this one, they are your B's. So in this case, to be able to get the total taxable income, let me discuss for the hospital. We just need to take 500,000 minus the cost of work certified, which you are able to get 234, 585. Then for the other person who is the office complex, for the office complex, what am I supposed to be doing? I take 700,000 minus 303,491. How much is this? 303,491. So 700,000 minus my answer here, you should be getting 396. 396,509. So the first one should be 500,000 minus 234,585. 234,585, getting 265. 265,415. 265,416. 265,416. That is what you're supposed to be doing. That is how the question is normally done.
Can I ask a question?
Yes.
There's a cash received from subcontractor. That one is not considered at all.
Yeah, that is not considered.
Okay.
That one is ignored. So the assignment here, you should be doing a question tested on which period is this? December 2022. December 2022, there is a question number 4B, not A. There is a question 4B. December 2022, question number 4B. December 2022, there is that question. You can just go and practice. You do your practice on it. Allow me to do my last question. There is a question here discussing about petroleum. And this question was tested on April 2022. In April 2022, there is a question of petroleum. I know that we were able to go through the videos which I shared regarding the taxation of our petroleum. And I know very well that you are understanding the notes which I provided there. And that being the case, let us first look on the question. Then I will be able to provide you with the solution of the question. Immaculate ndio anjasoma mama Immaculate, yes. It should be question 3C. Can you read our question, kindly?
Petro Limited is a company in the business of exploration and production of oil and gas in your country. The company reported a petroleum profit of 143,600,000 shillings in the year ended 31st December 2021. This figure excludes crude oil produced but not sold, valued at 4.2 million. The following expenses comprising capital and revenue expenditures were deducted in arriving at the reported profit. So we have geographical staff salaries, legal costs for title deeds, dry hole contributions, drilling and test development costs, capital losses from previous year, memorandum of understanding credit, royalties on domestic sales, royalties on export sales, non-productive rent, customs duty on plant and equipment, purchase of assets for offshore operations, provision for restoration of wells, petroleum investment allowance. Additional information. Number 1, petroleum investment allowance included depreciation of equipment of 378,200 shillings. Offshore operations included a tractor purchased at 920 shillings for use on the site in your country. Computers and computer software was for 780,000 shillings and 360,000 shillings respectively for use in the country. Could you scroll down? Number 4, the offices were partitioned at a cost of 1.48 million shillings. Required, number 1, a statement of computation of petroleum profit or loss for the accounting period ended 31st December 2021. And number 2, tax payable, if any, by the company.
Thank you so much. You can see this question the way it's being said. We have already been provided here. The company reported a profit of 143,600. So it means after the following expenses which were being deducted. So what am I supposed to be doing? I'm supposed just to be looking on 143,600. That is what you are able to recognize in terms of profits. But when you continue with that statement, you are being told this figure excludes crude oil produced but not sold of valued at 4.2 million. That one you are going to be deducting from the profit, which is already given up there to get our total, our net income. Now, in this regard, it means out of the transactions in which they were able to undertake during the year, or which were being deducted, it means we are going to be doing something called, we are going to be adding back the disallowable expenses. And in case we have any allowable expenses, we are going to be deducting thereafter. So in that case, let me do this. So in that case, let me start by writing my title. Remember, this is a question for petroleum. And this one touches up to the aspect of the disallowable taxation of the business income. That is a concept which you are not supposed to be forgetting. It is cutting across. And I know very well that I will need also to do some questions, but because it's a bit, it is already late. There is a question for VAT, which I'm supposed to be doing for you later. Maybe another day. I will just find another day I do for you for VAT and employment income. Now, we are doing a question for Petrol Limited. Petrol Limited. Petrol Limited, we are doing a question for 2021. Adjusted taxable income computation. Taxable income computation. Now, here we have two columns of Kenya shillings. So the reported profits, let me just reduce it to thousands, minimize my shillings, 2,000 there. So my reported profits, our reported profit is how much? We are being given 143,600. Then we less the crude oil which we are being told not sold, amounting to 4,200. What is my net income here?
Can I ask a question?
Yes.
The statement says the figure, the 143.6, it excludes the crude oil produced but not sold. So the fact that that is already excluded, meaning it's not part of the reported profit, right?
When it should not be deducted, it should be added. Because we have been told that the figures exclude the crude oil produced but not sold, valued at 4.2 million shillings. But already, because it is part of our stock, the cost of sales, which is supposed to be sold, we just need to
It's not
export it.
income because it's not sold.
Sorry?
Or
Are we together? It was not sold. No. I have seen the sales there. Yes, Shimos. Thank you. Now, let us list disallowable expenses. Sorry for that. I'm saying this, Let me share my board so that we can be able to look for any disallowable expenses. So what are some of the disallowable expenses which were deducted during the year? And allow me to start with the, when you look on the additional information, we are being told that number one, the petroleum investment allowance included depreciation of equipment of 378,200. So first we add our depreciation here. Depreciation of ours, we are being told 378,200, 378.2. Then also we are being told there that offshore operations include a tractor purchased at 920 for use of site in your country. The purchase of tractor, you know that the purchase of the tractor, we don't recognize the purchase, but the capital allowances amounting to how much? You have been given 920. The offshore operations, how much is the offshore? Let me just check. We are being given what? The purchase of assets for offshore operations. Should not be the tractor, but all the amounts should be disallowed. So let me just say this. The assets, we're being told we have, when you look on the transaction, there is a point where we have been told the purchase of assets for offshore operations. We don't recognize any purchase of assets. You know that under the Income Tax Act, amounting to 7840, we just disallowed the whole amount together with the one for tractor. Then we have been told number three, the computer and computer softwares were 780, 780 and 360 respectively for using the country offices. So how much is that? The computer and computer softwares, what are we supposed to be doing with them? Let me see how there. Or do we have any purchase? Okay. So we have computers. The purchase of these computers given us 780. We have computer softwares. How much is our computer software? Given 360. Then next we have, I think I'm audible enough. Number four, we have been told the offices were partitioned. Sorry?
For computers and computer softwares, we're not doing just capital allowances.
You shall be able to do the capital allowances under the, when you are deducting, but the cost of them, we add them back, right? Are we together in that point? But I just want to understand one thing there. The figures which were arriving in these, I have not seen anywhere where we were able to purchase, because the purchase of assets for the offshore operations, it should just be 778.40. For computers and the computer software are not part of the figures which were deducted to arrive to these reported profits. So as per my argument here, these ones are not supposed to be included, but we are going to be including them when we are going to be calculating the WT, when we are going to be deducting our expenses. So allow me just to look on the assets or the expenses which were deducted to arrive at these reported profits. What I can be able to see, note number 3 and 4, they are the things which were done but were not included in the deductions. Let me go back up there. We have been told that we have the geographical or physical staff salaries, okay, is allowable expense. But we have the legal cost for the title deeds. Legal cost for title deeds. The legal cost for the title deeds, we have 562.4. Now we have dry hole contributions, allowable expense. We have drilling and test of something there, allowable expense. Capital losses from previous years. Previous year, you know the capital losses. These are capital losses. This allowable expense. Capital losses from previous year. The capital losses from previous year will be able to around the capital losses 192.8. 192.8. Then we have memorandum of understanding credits. Memorandum of understanding credit is allowable under these kind of taxation of petroleums. We have things like the royalties on domestic sales. They are disallowable. Royalties on domestic sales. Their disallowable expense amounts to 3.6 million. 3.6 million. We have things like the royalties on export sales allowable. We have non-productive rents, right? Non-productive rent is an allowable expense. We have the custom duty, right? We have the custom duties. We have the custom duty, and you know why I'm adding it back, amounted to 672.3. 672.3. We have the purchase of assets for offshore operations. We have already captured it. But we have the provision. We say only one provision is allowable. So we have the provision for restoration of wells. The provision for the restoration of wells amounted to 1575. Okay, then we have petroleum investment allowance of 9.2 million. Petroleum investment allowance of 9.2 million, which is an allowable expense. You don't have any problem with it. Now, let me just get the summation. So we have 378.2 plus 78.40 plus 562.4 plus 192.8 plus that 600 plus 672.3 plus 1575, getting around 14,820.7. From we are not deducting, we are adding back, sorry. Then we less allowable expenses. One of the allowable expenses is additional 3 and 4. So we start with the computers, which normally qualify for WTA class 1 at the rate of 25%. 25% of how much? 360,000. As per additional number 3, 780. So 0.25 times 780, getting 195. Then after the computers, we have comp softwares. The same rate is 25% of someone should be 780 is 360, right? So in this case, 0.25 times 360, we are getting 90. Then from there, we have the partition. which normally qualify for class 2 at the rate of 10%. 10% of how much? 10% of 1480. This translates to 148. Then we have tractor. The tractor, we were given a tractor somewhere. It was purchased at 920. It should be 25%. 25% of how much? 920. 0.25 times 920, getting to 30. How much is this? 195 plus 90 plus 148 plus 230. We are getting 663. What is the total taxable income? What is our total taxable income? So we have 143,600 plus 14,820.7 minus 663, getting around 757.7. 757.7. Now, the tax liability here, tax payable, will be 30% of 757.7. How much is this in Kenyan shillings? Just multiply by 0.3, getting around 47,327.31. 47,327.31. 47 point all of that. So I think the areas which I just want to check next time, I just want to look on the VAT. We need to be looking on the employment income. The questions which are being incorporating the employment income. Once I'm done with the two areas, we are supposed to be good to go. And maybe I look on the taxation of partnership. We look on the taxation of partnership. Once we check on all of that, I think we should be in a good position to go. Nothing much we require now from the question which I have done previously in class. Any question?